Howdy, Wall Street Willie. What are the advantages of investing in Treasury Notes? T-notes are backed by the full faith and credit of the US government, meaning there is no risk of losing your investment due to default. They provide regular, predictable income. They are also liquid, which means you can easily buy or sell them in the secondary market. They have a low minimum investment of just $100 and can help diversify your portfolio and reduce risk. Also, T-notes hit that sweet spot where they have higher yield than T-bills but are less risky than T-bonds. Lastly, the interest earned from T-notes is exempt from state and local income taxes. What are the disadvantages of investing in Treasury notes? Since T-notes are very low-risk investments, they also have far lower returns than riskier options like corporate bonds or the stock market. And like other fixed income securities, T-notes are subject to interest rate risk. If you need to sell your T-note before maturity and the interest rates have risen, you might lose money. Also, it's possible to actually end up losing purchasing power if the rate of inflation is higher than the T-note's interest rate. Lastly, federal income tax still applies to the interest earned. Should I invest in T-notes? Treasury notes are a great choice for medium-term investors who are looking for steady, reliable income through a risk-free investment with high liquidity. For instance, if you're approaching retirement or saving for your child's college education that's 5 to 7 years away. But if you are investing for a longer term and are okay with more risk, alternatives like corporate bonds or the stock market are better since they'll give you far higher profits over the long term. Thank you very much, Wall Street Willie. You're welcome, Super Cooper. Remember, finance is your friend.